It is time when many of us plan to make the best of our Diwali, Christmas or New Year holidays by planning an overseas family vacation. But then one of the villains who can be a spoil sport, in the planning of your vacation is, as you all know now, TCS, tax collected at source. The way it was sought to be expanded by the budget 2023, in fact, it created a furor. And it even finally had to ensure that the FM had to say that, okay, we are deferring the implementation of the higher TCS provision until 30th of September. So the overseas tour program packages, up to 30th of September attracted 5% TCS, but then post 1st October 2023, if you cross this limit of 7 lakhs, then the tax rate of TCS escalates to 20% on the amount which is in excess of rupees 7 lakhs. Are there any smart tips, practical ways in which you can ensure that you can keep your TCS liability to zero and become a hero of your family as head of the household, having done some smart planning? There are two separate heads under 206C. One is the overseas tour program package. As you are also aware, many a times when you draw forex etc. or make remittances, you come under LRS, which is known as the Liberalized Remittance Scheme. So how do you compute these limits? Keep in mind that not every foreign travel attracts TCS. Just because you purchase a ticket for going from, say, Ahmedabad to New York to meet your son, or to London to attend a wedding, on your ticket travel, there is no TCS. Suppose you decide to go by spending your tickets and then plan out separate, standalone hotels by making bookings for the same, there is no TCS. Why? Because 206C does not talk about international travel or international hotel accommodation standalone. In fact, the CBDT circular on this very subject, circular number 10 of 2023, dated 30th June 2023, has very much clarified in its FAQs that if these expenses for international travel, hotel are incurred separately, there is no liability to TCS, because overseas tour program package, as has been defined under section 206C, says, firstly, it should include international travel plus hotel, lodging and boarding and or means hotel accommodation with or without food, incidental expenses as part of your travel, which may cover local tours, participation or viewing some shows or other visits, etc. If all this is as a part of the package, so if there is more than one element into this, then it will become a package. Then it will attract TCS 5% and 20%. Obviously, a question may arise in your mind that in the first 6 months, you had gone for some trip where you had spent 5 lakhs, 5% TCS was cut. Now, after 1st October, you are spending another 5 lakhs. What would be your rate of TCS? You will have crossed the 7 lakhs and therefore the amount of 3 lakhs in the total FY spending of 10 lakhs will attract higher TCS at the rate of 20%. This is what you have to keep in mind. Again, the CBDT Circular 2023 which I mentioned, number 10 of 2023, has also clarified that the 7 lakhs threshold limit for purposes of the overseas tour package and for purposes of LRS, the Liberalized Remittance Scheme, will operate independently. That means, presuming you have utilized your package of 7 lakhs as far as tour program package is concerned, and then you are spending something out of LRS, either purchasing forex or making a foreign remittance, what you are spending on LRS is not to be considered for tour program package, and while you consider the threshold limit of LRS, what you have spent on the tour program package will not intervene or come in your way as a conflict. So this is the second important aspect which you keep in mind. Obviously, the most smart and practical tip is to do standalone travels, if possible. Now, it may not always be possible, and say you are going as part of a package. But here again, you can be smart, keeping in mind the term small is beautiful. Presuming your whole family's package is 20 lakhs. Don't let the head of the household spend the entire 20 lakhs, because it will be otherwise 5% of the first 7 lakhs, and on the entire 13 lakhs it will be 20%. It will eat away a lot of your liquidity. No doubt you are going to get credit for that against your other tax or income. But it does, at least for a middle class family, impact and affect the liquidity. So in this case, keep yourself within the 5% regime, because this is qua each payer who is having a PAN. So suppose this 20 lakhs of the family is paid by 5 individual members, 5 lakhs each, it will be only 5% in each of the 4 cases, and you will not cross the Lakshman Rekha of 7 lakhs, because it is qua not the family, it is qua the individual person making the payment. Another very, very important aspect which has to be kept in mind is that if you use the credit card for purposes of your foreign travel, if you are purchasing forex or you are using a debit card, for foreign currency, etc., that would attract TCS based on the 7 lakhs limit, etc. But if you are spending any amount of forex as far as your credit card, which if you are fortunate and lucky and you are enjoying a good credit limit, utilize it, you make the payment at your leisure, and there will be no TCS whatsoever. So here are, and again, even if you are taking part of a tour package, many a times the package operators, they want certain foreign exchange as part of that to be paid to them. Now, if you are paying this forex to the operator, straight away it gets into the 5% or 20%. But if you are buying your forex separately, it is treated under LRS, and as I explained earlier, that's a separate kitty, and therefore if it is within your 7 lakhs limit, there will be no TCS on that. So here are 4 smart practical tips, being within the 4 corners of law, how you can either even make your TCS zero or keep that liability to the minimum. If you can do it the smart way, why not practice that art?
Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.